get there. It's all in how you get there. The SRX from Cadillac.
Hello traders, Gary Wagner here just before 11 o'clock in Honolulu, 5 o'clock in New York on Tuesday, the 13th day of May 2014, and this is the daily report for gold and silver. We have all green across the board, precious metals as well as the Dow, all except gold. Gold is the only precious metal trading lower today. We actually have platinum up about $17, palladium up about $10, silver unchanged. Gold is off roughly $1.90 to $2. As you can see, current print on the screen, 1293.36. The low on the day is 88.40. The high 99.90. Silver trading unchanged to up slightly. Current print 1951, the low 26, the high 69. It is still below 58. We've talked about that before. We'll talk about more on silver towards the end of the show. You know, traders, even though we have lower pricing, slightly lower pricing, off about $1, $1.50, we have that in the light of an equities markets that broke through 1900. Didn't close there, but broke through 1900 for the first time in history. And that to me is significant. When we look at this market, what we have been looking at and pointing out is the fact that when we take a look at these series of highs in the market, here, 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 and then again here, we have had a series of lower highs as we have had this progression over, call it the last month. At the same time, these last three lows have been higher lows. So whenever you get lower highs, higher lows, you get the range which compresses. And when you get a range that compresses, you get a basic pattern that's a compression triangle. In other words, we have a narrowing of range, and the thought behind it, as we've talked about over the last few days, is as it approaches the apex and breaks through that apex, there's the opportunity, the chance, the probability that we will get some sort of release of pressure and a dramatic breakout. Now that breakout can be to the upside and it can be to the downside. The key about a compression triangle is not really giving you the direction in which the breakout is going to go, but the theory states is that you get a release of energy. When that energy is released, you will typically get a sizable move. Now, that isn't 100% occurrence. It doesn't always happen, but it's absolutely something that we want to keep our eye on, because from my calculation, that could occur anywhere between, say, the 21st, 22nd, 23rd, right in that area in terms of where the apex comes, where these two come together. So it's certainly something that we want to pay attention to. Now, all I've done is converted this most recent chart into a Japanese average chart. Let's go ahead and blow this up a little bit so we can see if there's any information that we can derive out of the most recent candles that have come in. So whereas we've been range bound, and I still believe that we're range bound, we're really now in the center of the range. And when you compare it to where this apex comes in at, right in here, you can see that we're right there in the center of the range. The interesting thing is we've had some of these lows come outside of the boundaries, but I really think that the important thing is, of course, the bodies of the candles, whether they be Japanese average or standard candlestick charts. The fact that we are trading within this range, it is still trading sideways. There's absolutely no doubt about that. We'll have to see how this market reacts as it gets closer and closer to the apex. Now, the next chart that we're looking at, of course, this is a daily chart, Japanese average format. And as you can see, we do have a green candle. We have a green candle even though the market is closed basically unchanged to slightly lower, because, again, these Japanese average are created by comparing themselves to the midpoint of the prior session, in this case, the prior day, because we're looking at a daily chart. When we take a look at this particular low right in here, we draw, and I'm going to try and draw it as straight as I can, of course, but when we draw a basic parallel or a straight line across that, we can see, aside from these tails right in here, aside from these tails, we have had tremendous support at about, call it 1280 to 1282. The market is now trading above that, but we still have our resistance. We have resistance right here. We have 1312. That's going to be the top of these bodies. And then 1333, that's our other point of resistance. And that should the market find support and then break to the upside. Traders, I've gone ahead and converted this into a standard candlestick chart. Now, the chart that we're looking at is not the cash market. We are looking at COMEX Gold, GC right there. This is a continuous contract. Looks as though we have concluded, of course, in New York, but we're still trading actively as we go into the session break in between New York, closes for a little bit and then reopens. So we're still ticking here, but the market essentially has closed, as I said, unchanged to a couple of dollars lower. The key is we look at this chart in the same way that we've looked at our Japanese average chart, is we do have this band of support here. We do have a strong band of resistance. And as we have mentioned, we have been trading sideways. We've been trading sideways in a narrowly defined range for the better part of the last couple of weeks. Now, there are a couple of strategies that I am going to talk about over the next couple of days in which we can profit from a sideways trading market by the use of options. Now, it's not a traditional use of options. This would be where we write calls or write puts, take in the premium and maintain a long position that is covered by the option position that we have. That's one technique. The other technique to maintain a position as this market trades sideways is to purchase one put option very, very near your entry price, and that's the maximum risk. Of course, if it goes into that price, your option then becomes in the money and trades basically tick for tick with the futures. That can be a costly way, though, to protect yourself. But over the next couple of days, I do want to discuss different strategies that we can implement with this type of market. So traders, we are revisiting our basic chart that has our Andrews pitchfork. And then, of course, what we want to notice or what we want to focus upon is we know that we have major resistance at the 0 point. We can see that from here. Of course, this chart was created 1900 is the handle, and then your prongs come here, 1535, and then 1800 here. The market, as it has cascaded down, has always maintained a channel between the 0 and 100, and so we want to see how it reacts at different points. We saw that as the market came and actually for the first time broke above this point, came dramatically lower, fell right to the 23% retracement point, and has been slowly meandering up, although it's a little sideways. So our question is, as we go to the apex on that compression triangle that we pointed out, are we going to get that sizable breakout that takes us above this 0 prong, because that would be absolutely significant, or will we see the market really meander back to this particular 23% level? Because we should see some sort of a dramatic breakout as the market hits the apex. Now, as I said, it doesn't always happen, but there's a decent opportunity that we'll see it. Now, depending on where it goes, it's going to give us volumes of information, because if it cannot break through this particular point, it tells us categorically, undeniably, we are still in a bear market and there's nothing we can do about it. On a technical basis, the market's probably going to head back to this 23%. We'll see how it reacts at the 23%. However, if we do get a significant break and it breaks above this, that's telling us that we're really looking at a different animal, and that these most recent rallies, meaning the $200 rally here, we had a $200 rally here, this being really the only rally of 2013. When you consider here's 2013 right here, we dramatically saw this market move from what, about 1750, something like that, down to this low here. That was the first of a double bottom. Here's that second of our double bottom right here. Market genuinely takes off and really hasn't tested those low areas since that. So to me, I find this to be a pretty critical point in the market in which we are going to derive substantial information out of it, and it's really going to tell us whether or not we have been looking, as this market came up, if it was simply a counter trend, we're in a bear market and we're simply witnessing a counter trend to that bear trend that's prevalent, or if we have had a distinct change in atmosphere, change in perception, and we've moved from a bear market into a bull market. Very, very difficult to conceive that over the last couple of weeks because we've seen sideways action, but realize we're seeing sideways action just below 1300 as opposed to just around 1181 to 1200, which are these series of lows that we have here as well as here. So lastly, we'll take a look at silver. Silver's trading 1950. It's still below that benchmark that I would look at before I would even consider taking any kind of stab in the market because it's a pretty important fib number. But what we've seen here is the market had a dramatic rise yesterday. You can see that with standard candlesticks, this large green candle. And today we've got this very, very inactive day in which the open and close are pretty much identical. It means the market closed unchanged on the day, and it closed unchanged on the day near the top of this range, meaning the body of this candle. I'm still going to suggest we sit on the sidelines. We could be forming a base in this area, but we'll have to see how it plays out because, as I said, the one thing that we have seen in this market over the last call it a couple of trading months here. This is back in the beginning of end of 2013, 2014. It just sits in a tight range. Here we sit in a tight range before breaking lower. And here the range opens up a little bit, but it's still a sideways market. We're not getting a defined trend down or a defined trend up, but we are getting sideways trading activity. This has been Gary Wagner wishing you as always good trading. We'll talk to you tomorrow on Wednesday for another daily update and review. Bye-bye.